Pawaskar also joining us, lead analyst at ICICI Direct. Kaustubh, how are you reading into the numbers? First off, right off the bat.
So yeah, strong set of performance. In fact, 18.5% revenue growth was way ahead of what we and Speed were anticipating for the quarter. We were penciling somewhere around 11% kind of a revenue growth. It was anticipating around 13% kind of a growth, but 18% growth was much better than what we and Speed were anticipating. And the company has already indicated that large part of this growth is been driven by the volume growth, substantial volume growth. So on the revenue front, it has been strong. However, at the margin front, the margins at around 21% came lower than what we were anticipating at around 22%. So I think the inflation impact is still there, raw material inflation, and we need to monitor in terms of how the raw material prices momentum would be in the coming years. But definitely on the revenue front, it is one of the strongest quarter for Nestle after they have already seen improvement for past couple of quarters in terms of growth. But Q3 the growth was much better compared to what it was in the first half.
Would you be worried? Volumes seem to be very strong, but at the cost of margins, would you be worried?
I think once the commodity prices, stabilize, I think even margins would recover. I think that should not be a worry until the time you are posting, solid volume growth numbers. In fact, even this 18% growth, we need to understand, how the impact of stocking or inventory pile up post the GST implementation. That is also something which we need to be monitored. Going ahead, what could be the volume growth momentum would be for the company in the quarters ahead. But in this quarter, it was one of the strongest quarter in terms of revenue performance for Nestle.
Okay. What is your sense, Kaustubh? Is this kind of sustainable going forward? Obviously, we'll have to hear from management. But what you track the sector closely, rural seems to be doing okay, it seems, but urban still hasn't picked up significantly. What do you sense is the lever for this growth, and how sustainable is it, volume-wise?
So obviously, one of the important lever is the GST rate cut. So if you look into the performance of some of the other FMCG companies, we have already seen there is a recovery in the revenue growth. For example, yesterday ITC came out with the numbers there. FMCG business also seen a good recovery, got back into the double-digit revenue growth trajectory. Some of the other companies are also doing good in terms of revenue growth. So categories where the benefit of GST rate cut was there, I think those categories have started seeing a good growth. Obviously, rural demand is also picking up. Urban demand is yet to see that kind of revival or much push in the that is something which will be monitored ahead. But if we see, demand in the urban market recovering, I think that will again act as a lever for FMCG companies in the quarters ahead. So I think, for the sector as a whole, I think the growth will improve unless there is, something like inflationary impact or, slowdown kind of a situation is there. But I think the GST rate cut, the whatever initiatives the government has undertaken, I think that should help this growth momentum to further improve in the quarters ahead.
And Kaustubh, sorry, last question. I know I'm keeping you waiting. What was your volume estimate? What were you penciling in versus what do you think likely the volume number has come in at, in your opinion?
We were expecting around 11% volume growth, and I think volume growth definitely would have been much better than what we are anticipating considering the growth. But whether there is any price mix impact considering the category mix improvement as well, that is also need to be understood. But obviously we believe that volume growth should be much better than what we were anticipating for the quarter, what we and Street were anticipating for the quarter.
Sure. So were your estimates ahead of the Street? Because my understanding is the Street was penciling in something around 7. Am I right?
Yeah. So we were anticipating around 700 crores of PAT for the quarter, and PAT came around 1,000 crores, so ahead of what we were anticipating. In fact, Street was anticipating around 750 to 770 crores kind of a pad. I think it came better than a Street expectation as well.
Apologies. In terms of volume growth, you were penciling in 11, right? I just want to kind of clarify this for viewers. You were penciling in 11%. Street seems to be penciling in around 7. Was that what the consensus was in around? So you were in any case on the higher end of that consensus, right?
I don't know much about the Street, but I guess it was more in terms of 9 to 11%.
Fair. Okay, point taken. And how much would that beat be is currently difficult to quantify.
Yeah.
Okay. Kaustubh, thank you so much. I know that, in the thick of things, it can get tough to kind of give answers right off the bat as soon as numbers come, but you've done a damn good job of it. So thank you for that.